Welcome to Seeking Alpha, Alpha Talks Editors Roundtable. What moved the markets this week? The week ending Friday, May 7th, 2021. A crazy week that started with the Yellen head fake, Treasury Secretary Janet Yellen coming out, effectively calling for higher interest rates. The market freaked out, and a couple of hours later, Janet Yellen said that she was just kidding and that she didn't think that the Fed should do anything based on her recommendations. So the markets recovered from that. And we had some selling, though, especially in tech stocks, which then rebounded. And this morning, major miss on the non-farm payrolls report. Apparently the largest miss to the downside, at least, since 1998. Which once again demonstrates that perhaps economists do have the easiest job on earth, if this is the best they can come up with. And but markets shrugged that off too. Bonds rallied a bit right after this was announced, and financials sold off. But other than that, things are cranking along here. Dow, by the way, I forgot to mention, it closed at record territory in 2 days in a row. And the Dow Industrials is now up 2.5% week over week. The S&P up 1.3% week over week. Nasdaq is down 1%. That's as of this recording at noon Eastern on Friday. Now, let me introduce the panel of my colleagues who will unpack all of this and discuss it with me in no particular order. They are Brad Olison, VP of News, Kim Kahn, Senior News Editor, Stephen Alfer, Managing Editor of Breaking News. I am your host and moderator, Nathaniel E. Baker, Senior Editor of Strategic Contributors here at Seeking Alpha. All right, Kim, what are your thoughts on this? Let's hear it.
Well, the market had a pretty good narrative building this week, from moving from growth and tech to value and cyclicals. It seemed like the Nasdaq had 3 sessions in a row where it closed down and finally got a gain on Thursday. But that kind of got turned on its head today. I mean, there was a disruption with Yellen, as you said, and the most interesting thing I found about that was those were pre-recorded remarks. So she could have been prepared for them to have a market impact, but somehow they weren't prepared at all for it and had to kind of walk it back. And as we're recording this, she's about to speak in about half an hour. And so we'll find out what more she has to clarify on that. But it's the jobs report today that really has people rethinking on a couple of fronts. One is the recovery stumbling? Is it not as strong as we thought? And in the stocks, you saw that maybe going back to the kind of new defensive sectors, the mega caps, and away from the recovery plays that it did really well this week. And then on the other front, they're rethinking, about a Fed policy. There's a lot of talk about tapering. There's a policy announcement coming, and at Jackson Hole, there's actually Bloomberg reported a $40 billion options bet on a change in policy being announced right around Jackson Hole.
Brad, what were you watching this week? Who were the winners and losers, and what other stuff do you have?
Well, I'll start off with some losers this week, just on some one-off pieces of news that were rather interesting. And Peloton, which is a widely followed name, had this recall of their treadmill unit, not to be mistaken for their cycles, which I think are still good to go, but their treadmills were recalled. You had billions of dollars in market value wiped off that name in a matter of a few hours. Then that was promptly followed up with some earnings, and now the shares are recovering quite a bit. So that was a potential loser there, taking some steam out of its momentum there. And then you also had some of the patent waiver news that the Biden administration was looking to try to ask some of these companies who've developed the vaccines to waive their rights to some of the patents. That hurt some of our patent names like Moderna, Pfizer, BioNTech, Novavax, and CureVac, which is CVACs. Most of those dropped about 10% on the news that was coming down the pike there. But as we've already mentioned here, a lot of the the weakness this week was in momentum names. Most of those are tech oriented, but I went down the list. I looked at some of these $2 billion and up names. Most of the names that are up several 1,000% this year, all were down in the double digits this week. Some of those included some Bitcoin names like Marathon Digital and Riot Blockchain, but GameStop was also one of them. And that momentum weakness found its way into the ARK ETF, which is widely followed by a lot of different investors out there. Kathy Wood is known as this, she almost has a cult-like following at this point, but the ARK ETF was on pace to lose about 12% this week, partially because they do load up on so much of these momentum names and these disruptor-esque stocks like Tesla, Teladoc, Roku, Square, and Shopify, just to name a few, which led to a big decline there. And then otherwise, we had some earnings. Etsy was a big loser this week. Paycom also, which were down more than 14% each. And I think a lot of that speaks to some of the risk appetite. We're at the highs, as you mentioned, Nat, the Dow setting new records. And we just saw a couple of notes this week, one from Goldman talking about some of their risk appetite indicators flashing warning signs. And Bank of America, I think in a note that Kim wrote earlier this week, talked about how hedge funds were selling at a record pace over the past few days. So as much as we like to talk about the optimism in the market, you could see some underlying concern among some institutions and hedge funds. On the winner side, we can just keep talking about any name that's linked to corn, lumber, or any of these other commodities like copper, for instance, which set just another record high just earlier this week. And I think even this morning, that helped names like Nucor, that's NUE, and Freeport-McMoRan, which were both up 15% or more. And obviously on the industrial cyclical side, some of the oil names and servicers benefited, like Schlumberger and Halliburton.
Gosh, yeah, a very busy week, as we said, a lot of movement. Stephen, what were you watching?
A bunch of things, like you said, very busy. I thought the Yellen comments early in the week are really interesting because she's the Treasury Secretary. She's not the head of the Fed, and she's not, monetary policy is not her job anymore. And it's either a major mistake or it's just a further blurring of the lines between the executive branch and the supposedly independent Federal Reserve. I don't know that there is a line anymore. I don't know if she got a call from Jay Powell after that saying, "Hey, that's my territory. I'd like you to walk that back and we'll take it from here."
All right, let's move on to the segment of the show where we discuss our favorite stories, favorite news coverage, favorite Seeking Alpha articles that we maybe have been involved with or perhaps just seen. Sometimes tweets figure into this discussion as well. And let's start with Kim.
I looked at a story from our good friends at Data Tech Research, some research they did on the funding of fintechs, VC funding of fintechs in Q1, which came in at about almost $23 billion, almost double for a year ago period. And they're saying that, looking at the first steps of the banks getting, as they call it, Amazoned.
All right, Brad, what about you?
So I have to reassert my place on the celebrity beat.
Oh, great.
After a brief hiatus talking about Bitcoin for the past few weeks and kind of getting into Steve's territory. This time we're going to go for Bill and Melinda Gates. They are getting divorced. As much as this is gossipy, it's, this does have financial market implications. They own billions and billions of dollars of equities across their foundation and their trust. So did an item earlier this week talking about that. And it is an important distinction that their foundation and the foundation trust likely probably, won't be necessarily impacted, but their foundation has a little bit more, there's a little bit more fungibility there. Just looking at some of their holdings there, one of which I thought was interesting is they own shares in CureVac, which is one of the names, and BioNTech, which happened to be two of the names implicated in the patent waiver issue earlier this week, and purely coincidental, but they have a large holding there among those two stocks.
All right, Stephen, what about you?
Well, I'll go with Bitcoin, and it's a story from this morning. NYDIG, which is New York Digital Investment Group, they hired the CFO of Bridgewater Associates away to be their CFO. So they took the CFO of the largest hedge fund in the world, is now moving into the Bitcoin world. So the talent migration from traditional finance into crypto finance is picking up steam. It's a huge move. Ray Dalio, of course, has Bridgewater, has been Mr. Philosopher King, right? He agrees with the Bitcoin ethos and this and that, but he says at the end of the day, their governments are just going to ban it if it gets too big. Clearly, his CFO feels far differently about that. So I thought that was a big story, and I'll juxtapose that with Galaxy Digital, which is Mike Novogratz's. He's trying to build like an investment bank for crypto, a Goldman Sachs of crypto, if you will. They bought BitGo this week for $1.2 billion. Small deal size as far as financial markets go, massive deal size as far as crypto markets go. It's the first M&A ever over $1 billion. And we were lucky enough to speak with him. And he said, yeah, BitGo does this, BitGo does that. They're in custody. But what it really is about, I'm buying talent, right? And if you're a bank, your talent goes up and down the elevator every day. And there's this mad rush for talent, not just in the crypto world, but the Goldman Sachs and the JP Morgans and the Citis and the Bank of Americas. They're all looking for that same talent as well.
I wanted to pick on the economists for this NFP report. I mean, again, look, we realize that there's various factors here that go into these things and that it's easy to miss, but a miss of this magnitude just kind of boggles the mind in this day and age with all the data inputs and everything that they have. It just kind of questions again how they could get it so wrong. Yeah, I mean, we're not talking about a miss of a couple of tens of thousands or even hundreds of, I mean, several 100,000 is how they were short. I just don't understand that. And a lot of these individuals are very, very well paid by their employers, and it kind of begs the question what they are doing.
Well, Nat, I mean, an economist is an expert who will know tomorrow why the things he predicted yesterday didn't happen today.
Yes,
so
yes.
We all know that.
Yeah, that's a good one. If you ever want to piss off an economist, also wheel out the old Harry Truman joke about one-handed economists.
Right.
How Harry Truman said he wanted to have a one-handed economist because every single economist he ever met said, well, on the one hand, it could go up. On the other hand, it could go down. So, yeah. Economists hate that joke. So, anyway. All right, cool.
My dad's an economist.
Okay, I did not know that. So, all right. I will not make fun of them again.
I took economics in college, so I'm also offended.
Me too. I took it too, so I should be offended myself. I took micro and macro and international economy. Anyway, great. Awesome. So thank you all for listening to this podcast and or viewing the video cast, which hopefully many of you are doing. The audio version of this, which is slightly longer and more nuanced and probably has a few more jokes and humorous interludes than the video, that airs on Saturday morning at 6:30 a.m. through the Wall Street Breakfast podcast account. Get that wherever you get your podcasts. And with that, we bid you farewell. Look forward to speaking to you again next week.